All right, good morning. So again, obviously 15 minutes to cover the commodity markets and the grain market is not enough time, but we'll quickly broad brush it. I do have some things that I'm talking to producers about at the end that I'll cover here quickly. So with that, let's just get right into the information. Let's go touch base on the corn market. Obviously, got the USDA numbers on January 12th. This is the last balance sheet. Record production, record acres harvested, record crop, 17 billion bushels. We've never seen that number before. It's well above the last record of 2023. In that regard, put in that carry-in from last year at 1.5 billion. Right now, we're trying to digest our way through 18.5 billion bushels of corn that's available to the world, to the marketplace at this time frame. Obviously, we saw the price reaction on the report. In terms of corn, worst down days since June of 23 in that regard. And the biggest thing was, again, talking with producers, the amount of deflation in their attitudes that day. It was a tough day. Everybody was hoping for 10 more cents, and we wound up getting those numbers. Not going to go into it too in-depthly. We'll cover a couple of the bigger things as we go through it. You know, in terms of that corn market, Wisconsin did its share. In terms of helping out that yield at 188 bushels per acre. That is a record here in the state of Wisconsin. We've seen the articles about the corn piles and things of that nature in Wisconsin as we're working through this pile of corn that's out there. That large supply is going to be a wet blanket over the corn market until something were to change it dramatically, and that's just going to take time. So let's go ahead and get right through some of the kind of where the numbers are on the historical side of it. Obviously, you can see our stocks to use ratio. Currently just pushing under 18% with this, or of this report, 14% with our carryout at that 2.225 billion bushels. Okay, those numbers are very, very heavy, and again, it's going to take some time to work through this. One area that has been the biggest bright spot has been corn exports. Okay, we are exploding in our corn export sales. We continue to be the best market in the world for corn. Okay, Argentina, Brazil crops are still 3, 4, 5 months away before they get to us. But right now is our window. We need to move the corn product. If you look at the numbers, again, record export sales, large shipments moving, current shipments with yesterday's totals, 53% over last year. The USDA is only forecasting a 12% increase. You know, big question is, can this be maintained? You know, a lot of questions thought this was a front-loaded type of export sale. Hopefully it's not. Hopefully we continue this pace. But the question immediately comes to my mind, A, can we ship it? B, you know, what is the world, and does the world need it with the heavy purchases that we've seen up to this point? Okay, one of the best ways we're going to get out of a stockpile is not going to be by a supply cut. It's going to be by good demand continuing to push. Okay? Maybe we need another source of exports. I've brought it up in some of my interviews. Does China step into the U.S. corn market, pick up some corn here at these obviously cheap prices? They were big buyers in 2021, which really helped push prices higher during that window. Problem is the relationship or the spread between Chinese corn prices, U.S. corn prices is not anywhere near that level for the business side of it to work for the Chinese. So, but maybe there's some hope. I always just throw that out there because that would be a new source of demand that we're not looking at. Moving into the world stockpiles. Now, realistically, the world stockpiles is not too depressing in terms of numbers. In fact, if you go through it, lowest global ending stocks since 2014 and 15, because of that strong demand tone globally, lowest stocks to use since 2013 and 14. So realistically, on the global scale, corn is in a tight spot to some extent, okay? Take China out of the map because China is the world's largest producer and holder of corn, which is not available to the export market. You're looking at a 13-year low in that stocks-to-use ratio. So that strong world demand continues to be supportive of price. Also with that, the U.S. runs the world corn market, okay? If weather were an issue for our crop in the 2025-26 growing season, you can very well quickly see corn prices pop because of the global concern for need for U.S. corn. Okay, we're still the dominant player in that market. Unlike soybeans, we're not the dominant player anymore. Brazil controls the world market price. So here's what I'm looking at, some price ranges, possibly what we're talking for producers. Unfortunately, the numbers I'm going to put in front of you are not going to be much supportive of the numbers that Paul put together in terms of opportunity for producers out there. I'm just basically working a nice wide channel that goes all the way back to 2016. Again, right now we're kind of in the middle of the range to upper end of the range. Obviously, to get to that upper end, I think we're going to need to see some form of weather event or a source of demand that we don't see coming at this point. Right now, if we assume normal weather, with the way the policy in terms of insurance is set up, right now the incentive is still to produce corn. Realistically, if we're over 93 million, and I'm hearing 95, 96 million acres of corn coming again this year, because corn still, in terms of profitability, has the best potential, that's going to be way too much again, and only adds to the pile. Okay, so things could stay very, very depressed here in the short term and into the near future in the corn market. Let's go touch on soybeans very quickly. Again, there's the U.S. balance sheet for soybeans, yield at 53. Okay, beginning stocks coming in 325 million. Big concern on there, obviously, is the export side of the equation. I am still fearful that that export number is not low enough. Okay, on the last report, they did raise ending stocks up to 350 million bushels. Now, the soybean market has hung in there fairly well in terms of the price move. We're obviously trading at a much higher level than we were last year in this window. So at least there's some opportunity there, but again, break-evens are not there. There's not a lot of meat on the bone for producers. So we'll still have to watch. The crush is a big piece of the puzzle. As you can see, crush numbers up 125 million bushels, but we're getting to that point where does crush capacity kind of tap out here in the United States. We got room to grow it a little bit more, but that's something we're going to be watching, see how policy comes together. President Trump is supposed to be talking in Iowa today. Maybe he's talking that 45Z tax package coming out today. Maybe it's going to be the E15 talk, which I can cover in the question and answer session. It's not the silver bullet that's going to save the corn market. Okay, or my next thought probably is a second aid package gets pushed out in the speech today. So let's go look at those ending stocks numbers. I mean, we're nowhere near where we were in 15, 16, 17 in terms of supplies, but we have a growing supply in terms of soybeans. If we see carryout go up to around that 400 million bushel mark on future reports, if the demand doesn't continue to pick up a little bit here, that's going to be heavy on price here for the U.S. beans, especially with South American harvest just right around the corner. World soybean supplies, a little bit different situation. Obviously, you can see the stocks, all-time highs. Stocks used down slightly because global use has been very strong, obviously. Lower price brings more demand in that regard. Right now, stocks used at 28.5. Again, if you don't know what stocks used is, take 365 days times 28.5. That's how many days of available supply are out there at the end of the year. Obviously, that's a pretty heavy number. Brazil right now, potential record crop coming at us. That's only added on top of last year's record crop. There is talk of weather in Argentina, but realistically, the production of Brazil outweighs any of the losses that we see in Argentina from last year's numbers. You got to throw in the other countries in Uruguay too. Uruguay, Paraguay, and Bolivia and South America that produce beans. The crop coming out of there is massive between all those states combined. So that is going to be a concern going forward. Like I said, corn runs the global soybean market, global corn price market. Soybeans is run by the Brazilian price, just because the world's largest producer with the most available bushels out there and compared to what we have here in the United States. Right now, by just looking at price breakdowns as we move into the spring, right now the U.S. is about 50 cents a bushel above Brazil, almost 90 cents above Brazil for price for April into May, and that's the height of the Brazilian soybean harvest. So those are things, obviously, that keep me very anxious, the market, going into the next handful of weeks. Soybean export inspections, obviously that's been the story. Media headlines, everything associated with it. It's just the fact that the product of Brazil is so cheap at this time frame. It's not just China not buying. Actually, China now has clipped their 12 million metric ton total that they were forecasted to take here through some of the negotiations. The question is, what happens now? Okay, we got supposedly 25 million coming in the next 3 years. We'll see how that plays out. I'm a little bit skeptical that happens. Soybean shipments right now, we're down 37% from last year. For USDA was only forecasting a 13% drop. Current shipments are off about 13 million metric tons, which is about 460 million bushels. So that's easily numbers that could get put back onto the balance sheet as carry out if we don't see those bushels get moved. And again, it's not just the Chinese purchases, it's the globe purchases. China obviously stepped in, Japan, South Korea, Mexico, all those soybean purchases are decreased from the previous year in that regard. And that's basically been driven by the thing that factors the most, which is global price in that regard. Soybean range, I obviously keep a little more range into the soybean markets and some of the things I am looking at. Again, we've got a little bit of an uptrend in the market. As we can see, those are the red lines, a lot of lines in this chart. But again, historical price targets are what I'm kind of using for the range. I think the run out that we had in October, on the news of Chinese purchases, and that was a speculative driven run out. Okay, the fundamental factors weren't there. Only after the market peaked and started rolling over did China step into the marketplace. Okay, they are shrewd buyers of the product, and they only take advantage when the market's in their favor. So with that, right now I think we're in the middle, upper end of the possible price range for the year for November soybeans, for November 26. My bias is unfortunately to challenge that bottom end of the lower range, especially if the demand does not pick up. And realistically, there's some talk some more corn acres could shift back to beans, which realistically is the last thing we need, okay? If we add 1 or 2 million acres onto the harvested acre number for 26, assuming good weather, that puts another at 56 bushels per acre is what we raised here in Wisconsin, another record crop. That puts another 100 million into the balance sheet pretty quickly. And that's exactly, like I said, those extra acres are not what we need at this time frame because the demand at this point is still not there on the global scale. While crush is good, we like the crush, that's a big support in the marketplace. But again, we still need that small percentage, which is about 12 to 13% of US beans going overseas to get the push that we need in price. So some strategies and ideas, this is what I'm talking to producers about right now, and like a lot of questions. Paul was talking about the money flow situation, I can hear it. I put a position in for corn yesterday, a guy had to call his banker first to make sure he could get the funds to do it. All right, and that was only one contract. I can tell it's out there. It's tough talking to people, so we got to keep things smart, cost-effective, how we add value. Geopolitical, weather trumps everything I'm talking about very, very quickly. Obviously, we can see, we come through, we get a bad year of weather, production comes down, you're going to see the markets move. Just the speculative side, this is a new market here post-COVID. Okay, the old traditional harvest it, sit it, sell it in July for corn is kind of out the window. The impact of South America really comes into play now in the competitive global marketplace. Just look at last year in terms of great corn demand and what did prices do into the summer, just continued to fall as we had that big crop coming. So, producers, I'm talking HTA contracts, hedge to arrive, that is, cash sales, put strategies. Right now, we want to protect the middle of the top of that range, as I was talking about. We're in there now, so I'm active, getting things going. I want producers at least to consider to be up 30% sold here by 14th of February. Why the 14th of February? First off, USDA Outlook form is going to come out, probably a projection of 95 million acres of corn at a 183 trendline yield. That's another 16 billion bushel crop on top of this pile down. Also, February sets us up for March 1st notice day, which is when basis contracts have to be priced. If you have any clients with basis contracts, please be early, not late to the Super Bowl, and get pricing this thing. 85% of producers with basis contracts wait till the last minute. The market knows that corn is coming. The last 4 years, the average move from February high to March low has been 63 cents in corn. Other things to consider in that regard, again, those are seasonal talks, but no promise on that. But other things I want to consider. Again, reownership strategies, we're going to look for those breaks. February, early March is usually a typical window. If guys are making early sales, I want to have weather coverage in. So that'll be when we're going to pick up some calls or some ownership strategies over top those early sales, okay? Soybeans, that break is April to May. Last year we had an April low, and that low was sub $10. Okay, so I have a feeling that number could be pushed again this year because of the size of that South American crop. But that's a window we can get those ownership over early sales to protect us in case weather falters. For producers, we talk about watching the cash market. Okay, that's going to be the trends. What happens with basis? Okay, how do we target into that in terms of that movement of grain that is out there? And obviously, just keep a balanced approach. Have your producers talk to somebody like myself. just get information, okay? Information is king right now in tough times. It's not time to put your head in the sand and fight through it. Look at your options and ideas, things that you need to help somehow increase the revenue stream. So with that, thank you for your time. I look forward to your questions during the panel.